Hey, it's Larry Gonzalez with your housing market update. A lot going on this week, inflation-wise, and with some good news finally. First real good news of the year. Let's get right into it. First, we'll look at the big three. Prices are still up. No real new news on that. Housing inventory is up in Oahu. And rates are down. We finally got 3 green arrows in a row. So that was good news to start the week. So what was the big news? Well, we got home builder sentiment continuing to improve. We also have inflation reports. We had 2 of them this week, and they kind of given us a break on interest rates. So that was good news. And then unemployment claims, mixed bag. Not much to talk about there. But let's first get into the Consumer Price Index. That is the first of the inflation reports that come out this week. That one and the PPI, which is a producer price, or the wholesale inflation. And headline inflation rose from 2.7 to 2.9%, which is bad news. It's largely because of the cost of food and the cost of energy going up. But the core, which is really where the Fed is focused on, was down from 3.3 down to 3.2%. So that was really good news, and it would have been lower if those energy prices had come down, because airline prices were up, which gets counted into the core. So pretty good news there overall. And the producer price index actually rose 0%. So it stayed where it was in December, and was lower than the 0.2% that was estimated. So the good thing about that number is it filters into this PCE, the personal consumption expenditure, which comes out at the end of the month. And we also have the home builder sentiment. It improved from 46 to 47. Anything above 51 or above is positive. We have positive builders. Anything below 50 is negative. We have negative sentiment amongst builders. It's kind of a mixed bag on this. Current sales expectations were up. They are kind of sensing the excitement that you usually have at the beginning of the year. New year, new goals of buying homes. Future sales expectations, though, dropped from 66 to 60. So there are some concerns for builders right now. And then buyer traffic was actually up from a really low 31 to 33. So again, new year, you're starting to see more traffic. What is the reason for the improvement in sentiment? Is it just because New Year's new resolutions, or is there a hope we're going to have improved regulatory rules for builders so that they can build more? Well, we don't know. It's I always like to say hope is not a course of action. We won't know until next week, right, when we have a new president and see what actually starts to happen. But the builders, they're still hamstrung. They still need the cost of labor to go down. They still need the cost of the materials to go down. So, and you can bet there's going to be a big cost for wood as people go back into California and the LA area and start rebuilding, which isn't going to happen now necessarily. They're still fighting the fire, but at some point, a lot of resources are going to go into LA to bring LA back to life. And recover from these fires. That's about all I have on home builder sentiment. All right, I haven't showed this in a while. This is a 10-year Treasury. You can see the red arrows are the red bars at the far right. Those are 10-year Treasury going down. They were at near 4.8% as we started the week, and then we had a good inflation report. You see that big drop on the red line there. Today, or Thursday, we had a lower than expected retail sales report, which brought rates down a little farther. So that's great news. And the reason I show you this is because 10-year Treasury and 30-year fixed rate mortgage, they kind of moved hand in hand in tandem. Right now, conventional rates are about 2.6% higher than where we are with the 10-year Treasury. So if we continue to see the 10-year Treasury go down, that's going to be really good news. But you see some lines of resistance. It's 4.6, which is called a Fibonacci line. But basically, it is a line kind of in the sand. It's very hard to go below that. You need really good news to do that. And then you also have the 25-day moving average, the 50-day, the 100-day, and the 200-day moving averages. So those are all going to be basically stopping points for the 10-year Treasury as it goes lower. There is a chance if we get some bad news, we could go higher. And but the biggest economic news, we won't have the PCE. We won't get that until the following week, not next week, but the following week. Really, what we're looking at now is what's going to happen after Monday. We got the inauguration on Monday. What is going to happen to interest rates? No economic news per se in the sense of numbers, but there's going to be some news coming out next week. So expect to see some movement, but really we'll probably stay somewhere between 4.6 and then 4.8. I would say maybe not 4.8, but 4.6 to 4.7 on the 10-year Treasury, unless we get, get some other types of news. So, but that's what we're expecting. All right, initial jobless claims, not a lot going on here, folks. Initial claims are up 14,000. That's great, to 217,000 last week. Continuing claims, though, were down 18,000, so to 1.86. So not a lot of real good news there. Nothing that's moving the markets really. VA rates got pretty good movement down the last couple of days. You can see we peaked up there right around 6.6, 6.65. Now they're coming back down right around 6.5. So that's good news. We need to see that continue, especially as we get into the spring home buying season. But really expect to stay really somewhere between 6.25, 6.5%, probably closer to 6.5% for the next week and a half. And what does this all mean? Well, hey, mortgage apps are up. Again, new year, new resolutions. People want to buy homes. Well, 27% increase in mortgage applications last week. That's great. Refinances are up 44%. So a lot of people wanting to refinance their homes too. So that's really good news. We're still in a buyer's market throughout much of the western side of Oahu. Mililani, though, Kailua, Kaneohe, not really seeing a buyer's market. It's more stable there. There's just not a lot of inventory really over there. So that's kind of keeping those prices steady, and really prices across the island have been steady all along. Sellers, stay positive. Like I said, if I was a seller, I probably wouldn't put my house on the market until a March time frame, when you start getting more buyer traffic. This way your house sits on the market a lot less, and you may have lower rates. Regardless of whether rates go up or down, there will be more people entering the market in March, April time frame. All right, that's about all I have for you this week. Pretty short one overall for me anyway. Hope you have a great week. We'll talk to you later. Aloha.